And now with the latest business and market news, over to Jane Edwards.
Thanks, Alan. You should expect a fairly lacklustre session on the Australian market tomorrow after disappointing job figures caused a slump on Wall Street on Friday. The Dow and the Nasdaq fell by 0.5% and the broader market lost nearly 1%. The US unemployment rate crept up to a 6-month high of 9.2%, while just 18,000 jobs were created, destroying hopes of a recovery in the job market that have helped fuel the share rally of recent weeks.
We were expecting a bit of a rebound, and I believe most of consensus has been expecting a rebound from pretty much a weak first half of the year. We can't really blame it all now just on weather. So this is certainly a concern and moves towards the concern that maybe this transitory soft patch is not so transitory.
Investors are hoping that the second quarter reporting season beginning next week will give them some reason for optimism. Looking at world markets, the US and UK closed flat over the week. Europe was down sharply, while the Asian markets had the best of it, posting healthy gains. Now with more on local stocks and our own much more robust labour market, here's Tom Elliot.
Well, as you just heard, the Australian share market enjoyed another fairly strong week, possibly in response to the fairly benign unemployment data that came out. Local unemployment rate is steady at 4.9%, although if you drill down to the numbers, you do see that the participation rate actually fell. This is potentially negative in the future because it says that fewer people are now bothering to look for a job. Now, tonight, of course, the Prime Minister finally unveils her long-awaited carbon tax, and if the share prices of companies like BlueScope Steel or OneSteel are anything to go by, well, the share market doesn't have much to fear. Both were bought up strongly on the prediction that the carbon tax will not impact their operations too heavily. In similar fashion, the share prices of both Qantas and Virgin Blue were also stronger. This was, of course, a response to the ongoing woes of Tiger Airways, which could be now grounded until at least the month of August. In contrast, the shares of News Corp actually fell during the week after the company announced it would close its 168-year-old tabloid, The News of the World, in response to the UK's well-publicised phone hacking scandal. In contrast, shares in local TV network Channel 10 were up strongly after the company confirmed plans to sack over 100 people. Elders and AACo also up because of government intervention, in this case the decision to resume the live cattle trade to Indonesia. That will be very positive for both companies. Murchison Metals shares down strongly over the week after the company announced a major cost blowout at its Okajee plant. Many people now think the plant may not actually go ahead, and this would leave both Murchison shareholders and their main asset somewhat stranded in the desert. And finally, Foster's shares down around 1% over the week after Anheuser-Busch, the global brewing giant, suggested that it would not be bidding for Foster's. That's one less competitor that bidder SAB Miller has to look out for. Winner of the week is Centro Properties, up a whopping 59% for no reason at all, according to a company release late in the week. Loser of the week is Cougar Energy, down 25% after the company was banned by the Queensland government for drilling for gas in the Kingaroy area.